Someone had to ask. I'm Amy Viaclia, and this show is built on one idea that good questions asked of the right people make all the difference. Each episode, I sit down with someone who has the expertise most of us don't and ask the questions you might not know to ask. Someone had to ask, so I did. Today, we're talking about something that catches a lot of buyers off guard. If you've gone through the process of buying a single family home, it's easy to assume that buying a condo works the same way. Same paperwork, same timeline, same considerations, just a smaller space perhaps. But a condo isn't just a smaller house. It comes with an entire layer of complexity that often has nothing to do with you, your credit, or your finances, and everything to do with the building itself. Jay has seen condo financing fall apart for reasons that have nothing to do with the buyer. So I wanted to ask him to walk us through what's actually different, what can go wrong, and what someone should be asking before they fall in love with a place. Jay, welcome back to Someone Had to Ask.
Thanks for having me.
Jay, what actually makes a condo mortgage different from a single family home mortgage? Where does the process diverge?
HOA, Condo Association, and Homeowners Association. Those are the first things that, as a loan officer, what we have to go and look at. We have to look up and see if the condo is what's called a warrantable condo or non-warrantable. And those are factors that whenever someone looks at a home, looks at a condo, that there's no way they would know this, that there are extra steps. It's just because condos, oftentimes you can get a great deal. You can there's lots of situations I have now, especially in the last couple of years, where people are looking at condos just because of housing prices have gone up. So is condo, but you for what you get with a condo these days is really good. So they're attractive. But what you need to be aware of, there are a couple other steps, and you need to definitely relay to your loan officer what the address is, so then they can look up if they're what's called a warrantable condo or non-warrantable.
Interesting. So, what can go wrong with a condo mortgage that wouldn't come up at all with a house? Like the kinds of things that can derail financing through no fault of the buyer.
Yeah. So there's situations with that would be involved with the homeowners association, and we have to get what's called a questionnaire filled out with a condo. And it heavily looks at, okay, the number of units that are owner occupied. They will look at delinquencies. If you cannot be at 15% or more delinquency in homeowners association dues, that can derail financing at no fault to the borrower. If you're refinancing or purchasing, if there's a 15% delinquency rate, there's going to be an issue, to the point where you cannot close your loan if you're refinancing or buying unless it's under that 15% threshold of the total. If there's 20 units, what is that, three? You got to be at something like that. But like three or four, you got to be at that 15% threshold of the total number of units. So that's one thing that in a real life situation has popped up that was a little different, that I haven't seen. And if I have seen it, I have forgotten I've seen it. But I was reminded quickly there are more steps with a condo that the loan officer needs to definitely check before you get too far ahead. And because again, it's not going to be at fault to the borrower, to the person buying. They're not going to know that you have to trust your loan officer. So my side of things with a condo, I know I've got a couple of different things I've got to check first before I can send out my pre-approval letter and get everybody excited and all. Because the last thing you want to do is pull the rug out from someone and be like, okay, this is now a non-warrantable condo. There is no options. That's the last thing you want to tell someone. So it's really just like an added step before we pre-approve you. Let me know where the condo is and let me look up to see a couple things first, and then we'll give you the go ahead.
Does any of this change when you're refinancing a condo? So say someone already owns a condo, the rates change or the type of loan is like balloons or something, and they want to refinance. Does any of this look different? Are the pitfalls the same or are they different? What are some extra steps someone can take to, be thinking ahead if they're going to refinance?
Well, everything remains the same. It's just that there are factors that's completely out of the buyer, borrower's owner, if they're in the sense of refinancing, they can't really do anything because it's out of their hands on certain things like the homeowners association. Like, for example, homeowners associations, they have to also have at least 10 to 15% above and beyond what they show as far as money they have for repairs and that sort of thing. They've got to have a reserve amount. That's the word I'm trying to look for. A reserve amount of 10 to 15%. And they have to show that. So these are just added steps. And this is, again, it's out of the hands of a buyer, a homeowner, condo owner. They're at the mercy. So that's the pitfall. That's the risk you take with a condo. You can get a great deal if you're in the right condo association, everything, because you get a lot with what you're buying. You don't have to worry about, taking care of a yard or the outside of the property, essentially. I mean, you really get a good deal most of the time on a condo, but you have to be prepared to, like, okay, there's a few more steps involved if you're going to obtain it with a mortgage. Now, if you're not obtaining with a mortgage, buying cash for the condo, you're not going to run into these pitfalls. Um, but if you are obtaining a mortgage, conventional or government backed, there are extra steps, and it's really out of the hands of the borrower. There's really nothing you can do other than just check and see what if there's any delinquencies with HOA dues. Do they have an adequate fund for repairs? So that, I guess, that would be the due diligence that a buyer, if you were looking at a condo, could do. You would have to talk to the president of the homeowner association, let them provide that information. That would be what I would do if I were going to be buying a condo with multiple units. Single unit condos are that's almost just like a normal single family residence stick built home that's by itself. But a condo with multiple units attached, that's whenever you'll definitely want to get homeowners association information from the president, the homeowner association president.
So this brings up, you were talking about the questions that your client would need to ask. And I'm wondering, are there some questions that you've started to put in your notebook on what to
Mhm.
ask your clients so that they're prepared with the paperwork and the other documents or the answers that you are looking for?
Yeah, it's the main thing. Again, I don't want to keep harping on the same thing, but it's absolutely is all wrapped around the condo, the association, and being able to get that paperwork from them that I would need. That's the only really. It's a big step, and it's a big piece of information. So that's really the biggest and most sought after information that I would need in the beginning, is just to make sure if everything is going to check out with the homeowners association, um, because we have to get their master insurance policy. There's just more steps, because, as you know, that you still have to get your own insurance that covers essentially the inside of the condo, and that's why you really what you pay as a yearly premium at a condo is way less. But oftentimes it gets offset with the homeowners association dues. So you won't have homeowners association dues typically. Well, it just depends. You can have, of course, you can have HOA dues if you own a house on its own and not a condo. But most condos have HOA dues. Um, and that's usually, you might have homeowners insurance that just costs $50 a month, but you might have homeowners association dues that are 150, and then oftentimes more than that, just depending on the location.
I'm wondering if you wouldn't mind sharing any examples of some hurdles that you've had to leap over in order to get a loan closed.
Well, recently, there was someone that I think you know very well was refinancing her condo. And the hurdle there that we had to wait, and it came down to delinquencies being over that 15% mark in her situation. It was nothing that she could do, nothing I could do until we literally had to wait for, I believe it was every bit of 3 months before the delinquencies got under 60 days. You can't, it's 15% and not past 60 days late. So we were over that threshold for 3 months on that particular refinance. And it honestly, and it hurt her because the rates spiked up during this time. We had a rate, she still received a good interest rate, but it was a little bit higher and it should not have been higher. That's the thing. It was about 3/8 of a point higher than what it should have been had the delinquencies been down or under 15%. So she was completely just in a stranglehold until the delinquencies were under 15%. And we finally got there. But that was one of the bigger hurdles with the condo I've ever seen for that long. There's been hurdles I've seen like this before, but that was a big one that we had to wait on. I have another situation with a condo, and that was last week. This situation popped up, and it was the roof. The homeowner, the condo association does not have the require enough funds to fix the roof. This person would just had her heart set on this condo. It was a little older. We knew that there was going to be a roof issue with the life expectancy of a roof. If we see that it's going to be, if it has a life expectancy of 2 years or less, then that's going to be a problem. It has to be replaced. So that situation is also all the other condo owners are affected because they're attached. So she had to just back out of her offer because the homeowners association didn't have enough money to repair the entire roof, because you can't repair just one part of it. You can't repair just the one condo area. That everything has to be replaced. So that's another hurdle. You're really at the mercy of how well the condo association is doing money wise. Like, to have funds for repairs and all that, and having 10 to 15% above and beyond what it is required of them.
Well,
So it
that brings up another question though. Are homeowners associations forthcoming with this information? Or is it easy to get? Like, especially if someone is a potential homeowner, they're just inquiring. Is there anything that keeps them from getting this information?
Well, lots of times it goes through the homeowner association president, but then it's sent over to their whoever does their accounting. So now you're talking to typically the president of the homeowner association, who now puts it off to their accounting, whoever does that, XYZ accounting service, whatever. You have to communicate with them, and they only have limited information. They can't, so it can be a runaround. Just to be honest, it's a condo. Again, you can get a great deal. You just have to be cautious of where it is, and then you've got to ask for homeowners association information to see how healthy they are. That do they have enough money for repairs? Are they showing that? Where is it? Let me see it. Because it's all stuff I have to get. But I think the borrower, if I were looking to buy a home and I know this, I need to know this information. I think that should be something that I could see before I place a bid. And so I think that homeowner associations, I don't think intentionally withhold information, but sometimes they're not accurate. Lots of homeowner association presidents that are involved, they don't just do that full time. So it's not that anybody's being deceitful. I've never seen that. I've never seen that at all. It's just more of like, oh my gosh, I need to go get this information for this loan officer in this bank. And then it's kind of like a lot of hurry up. And
And who
sometimes it could
holds right?
just,
And who holds the information?
nobody knows all the answers sometimes. So condos are great. They are. I think they're a great buy. Absolutely think they're great buys. But there's other steps, and you've got to be aware of that before you get your heart just set on this particular condo, and then have the rug swept out from underneath you. So, and that's the last thing me or any loan officer wants to do.
Oh, Jay, I think this is one of those conversations that could save a lot of frustration for people finding out about these issues before they're emotionally invested in a place rather than after, like your recent client. If you're someone who's looking at condos right now or who's been burned by one of these issues before, I hope this gave you some language and some questions you can use. If you found this conversation useful, share it with someone who might need it, someone condo shopping right now, or someone who's already been through this and wishes they'd known sooner. Next time, we're going to be talking about different types of loans. That is something we've been talking in acronyms and abbreviations and different types, and we really need to dig into what are they. So we'll leave it there for today. Someone had to ask, so I did.